righty, Doc here from North America. Good morning, good afternoon, and good evening. And it's Monday, TGIM. Thank goodness it's Monday. I am ready to rock. All right, let's see what we got going on here. The dollar is falling. We're seeing all kinds of. You're not hearing it in the media, but you're seeing a lot. We're seeing it in the math. In other words, Bureau of Labor Statistics. Government math. And you're not really hearing it on the talking heads and so forth. But what we're seeing is inflation. We're seeing expansion of government competing with private sector. In other words, they're paying people to stay home. And we're seeing a lot of problems here. And so the dollar is going to keep on getting weaker until they can straighten this mess out, basically. That's what it comes down to, because they're knocking down the competition or the competitive ability of the free market system to grow. And so we're becoming euroized, I guess you could say, or globalized, or however you want to describe it. That's what's happening here in the States. So you can see here, let me just make sure our sound is working right. Something doesn't sound right there. Oh, yes, there we go. I can hear the sound now. All right, excellent. So dollar getting weaker. It's just the name of the game. That's the way we trade around here. We follow the math, follow the numbers. And as you can see here, the Swiss is heading down. You zip over to J4X, you can see the same thing going on. Lots of red day after day. Just like in our Chicago quant, except for the little bump we had right here. And then the markets just keep on rolling over again. And on the fact check spreadsheet, I would say, where are we at here? That's line what, 21? Yeah, so we're looking at now 2 full weeks in a weekly sell, 11 days in a daily sell. So the momentum is down. Be long, you be wrong. That's what we used to say on the trading floor. So be careful, traders. Don't be long dollars until we can see a change in government policy here. Let's jump over to, and that's why some people get a little frustrated with Doc or just in general. They like, what's government got to do with anything? It's like everything. You ever hear the word tax? How about regulations? They do it all. They control it all. And when you have the least amount of government, you usually have, and great laws combined together, least amount of interference by government and great laws that give everybody equal opportunity, boom, you have success. And that's usually the way it works. And our math reads that. Our math is a consciousness of understanding the consciousness of movement. That's what it really comes down to. All right, yeah, consciousness of movement. That's what it does. The math picks up the movement, and it's a natural consciousness to it. All right, let's jump over to Euro. Let's see how the Euro is going. Let's take a look at it on J4X first. Because you can see there's been strength there. Oh, I hear some noise in there. Robin, are you hearing noise in the microphone? Maybe I need to alcohol the input again. Let's see. Let's go over to the Euro. There it is there, right there. The Euro trading at 120.33. Let's put it up on the Chicago quant right there. You see the little bump there. Same thing, going up, up, and away. We've been in a daily buy there. Let's check that out. That's line 20, isn't it? No. Which one is that? The Euro, there's line 14. So there, we're 2 weeks in a buy. And you can see right there on the fact check spreadsheet, we are 10 days in a buy. So that's even more, juicing it. It's it just shows you the strength that we're seeing in here. You see how it keeps on trying to slide in and out of the strength, but look how well it's just holding over the dotted lines there. Matter of fact, I saw an advertisement for stochastics. I meant to click on it. Someone was saying trading by stochastic analysis, and I meant to look at it. Wonder if they're starting to copy this, which it's okay with me. If they tell everybody to follow this, it'll be good. Like I said, it correlates with our math about 65-70% of the time, which is not bad. It's to have a public indicator that's that good is always well worth keeping track of. It's just, my proprietary indicator is just better, that's all. But it's better than nothing. It's better to have a decent indicator than none. you know. Or you're tuning into Dukascopy here every day for an hour to check out Doc's action in his direction. All right, the electronic newsletter, the electronic trading pit. That's what we are. Let's jump over to the cable. I think it's in a daily buy, but it's not in a weekly buy yet. And you know, the moment it gets into the weekly buy, I get excited and I start yelling 142, 142. Let's see how it's looking this morning here. 142. Ah, okay, we got it. Okay. You know, I sent a chart out on this earlier, but I wasn't really watching it. You know, I was rushing to get it all done. Look at that. We're through the weekly. 142, 142. We always think that this has great potential. You know, it's the Commonwealth now. When you're dealing with the British pound, now you're looking at an economy of 2 billion people, not an economy of Europe with a half a billion people. You're looking at, at the same time, you know, the old classic saying, location, location, location. In other words, you know, you want to buy something that's nearby something that's popular. Well, they've got Europe sitting on their doorstep, and at the same time, they now have the ability, since they've done the Brexit, is that now they're allowed to be fully involved again with the Commonwealth, which the Queen, and our best wishes to her and the loss of her husband, the Commonwealth, they weren't allowed when they belonged to the European Union. They weren't allowed really to participate with the Commonwealth, which meant that they couldn't participate fully with Canada, New Zealand, Australia, Nigeria, South Africa, Kenya, Jamaica, Belize, and a bunch of others. Oh, India. You know, I mean, you know, they were really blocked out, and now they may pay. Europeans may pay a little bit more in tariffs, and England might have a little, or Great Britain might have a little more pressure on it when it does deal with Europe. But it now has 2 million more customers. I'm sorry, 2 billion more customers. So hey, you know, how can you turn that down, huh? So I don't blame them at all. So anyway, you can see that there. We're starting to lift. Let's look at it on the J4X. You can see it there. Oh, and here you go. The MACD is turning up with the weekly, so that's a good thing to look at. How about that? That's kind of neat. And, in this case here, you can see it. We went into the weekly sell back here in the 140-ish area, and it lasted for what? 1, 2, 3, 4, 5 full weeks, and now we're starting to launch ourselves back up again. So it's guns blazing north. That's what it is. It's heading north. Pedal to the metal. And we've been in a daily buy now for, 4 full days, going on a 5th. So at least you weren't short from down there. That's a good thing. All right. Now, let's see, what else do we do here? We go to, I'm trying to think, what do we go to? We go over to the Turkish Lira. That's what it is. We jump to the Turkish Lira. That's always fun. Turkish Lira is interesting. You know, I guess that's the best way to really phrase that. I see that they're trying to block out the cryptos. Just shows you how weak, on many levels, the whole economic thing is going on there. You know, a little sad. You know, in the sense that a country. You know, I guess we're going to be the same way soon. We'll be watching to see what our central bank does. We'll see if they get excited. And, we'll be seeing the same exact thing. We'll see how, if they get nervous about it and they create a law against it. I kind of doubt it, but we'll see. Mrs. Yellen used to say that it doesn't have much of an effect. They can't really do transfers, so forth and so on. So, and then you can see the story going on with China over the weekend. There's been this China talk that they're the bid now or something like that in gold and silver. They're trying to $180 billion bid, 180 billion bid on gold. You know, they want to start that. What do they want to start? They want to start a some type of crypto backed by gold. I can't imagine that, solely because we don't trust. Every time they try to do an audit on metals in China, they find out that it's all fake. So, and you got to imagine that the only good product they could develop would be something you can exercise. In other words, what that word means, exercise, not like run it around the block and keep it in good shape, but I mean, in other words, you buy it and then you can exercise it and take delivery of gold. So I'm not really sure they're going to be willing to do that. That I don't believe. I think what they're going to do is they're going to create so far we've been seeing that they're creating what they call crypto is more like a credit card. They can extend time of its life or they can shorten its life. That's not a crypto. Bitcoin is forever. As long as there's Bitcoin, there's internet and electricity, cryptos, Bitcoin and Ethereum and all of them are forever. What the Chinese are talking about is a credit card, and they're calling it a crypto, and it's not, because they can go to people who own it and say, oh, you know what, it won't expire in 6 months, it's going to expire in 9 months now, and then all of a sudden they're unhappy with you, and they go, oh, we're wrong now, it's not going to expire in 9 months, it's going to expire in 4 months. They control the amount of life it has. So I don't know why the media would pretend that's a crypto. But they do. That's why Doc's here and not on some crazy American one, that's for sure. And that is the way that rolls. All right, let's take a look at that Turkish Lira. And that's the sad part, is that they're part of that news has been to block out cryptos in delivery. And you can see here the strength is starting to kick back in, it looks like to me. That's daily, yeah. It's red here. Let's see what it shows on Chicago Quant. That's another one of those I haven't looked at yet. There it is right there. It's lifting up in the second day of the daily buy. Let's widen that out a little bit like so you can see it closer. But look at the weekly. The weekly is still pressing down. So you just can't be short at the moment, that's all. You can see here, I think the weekly is going to climb back up, and I think it's going to make a run towards that yellow dotted line. Let's see if we can move this down a little bit. There it is right there. It's going to take a run to that yellow dotted line area, and then it might even get worse. Who knows? It could go long-term capital management type crazy. We don't wish that on the Turkish people, but that's what the look has right now. It has that look like it wants to go all long-term capital management. For those that are young or older, they may remember back in the 90s when the ruble was trading in the 4s and the 5s, and when early 90s, I guess it was, 95, 96, 97, I don't know, something like that. And then so when it fell apart, the ruble now next turns around, it's trading in the 9s and the 11s and the 13s. And so, I would hope not to see this thing trading at 16 out of nowhere. One day it's 8 or 9, and the next day it's 13, 14, and 2 months later it's 16. That's going to be really harsh. Middle Age, how you doing? Gold and silver under a little pressure, even when the dollar down. Yeah. Let me take a look, because I have not been looking. You're right. They just took a whack at it, didn't they? I see that. Well, it's probably the Fed Reserve, Remember, the Federal Reserve controls a lot. America controls, what is it, 50% of the gold on the planet, something crazy like that. 60% of the gold on the planet. So we got a lot of room to put pressure on it, that's for sure. And they can generate a lot of cash and go sell futures and do a lot of fun tricks. Tricks. They do tricks. Central banks and the Federal Reserve in particular do a lot of tricks with the metals. So that's why the cryptos are very popular, because they've taken up the place that the metals were supposed to have. I've said this so many times on this webinar, I'll repeat myself because I want everybody to hear this. And that is, if you had asked me in 2007 and told me what 2008 was going to look like economically and quantitative easing and just the whole thing. If you had told me that in 2007 or 2006 or 2005 or whatever, 1991, whatever, but before it happened, if you'd have laid that scenario out and then they would have said, Doc, where do you think gold is during that scenario? I would have said 5,000 on the low end. Worst case scenario is 3,500. On the high end, 10,000. You know, that would have been my mindset back then. You know, and I still believe that to this day. I'm surprised that it's not trading at least at 3,500 or 5,000 right now in gold. You know, and how many countries have seen gold go to all-time highs and almost like not double, but you know, have done those type of numbers. But here in the United States, gold is what? Trapped at $1,777 as we speak. Let's go there. Let's take a look at that. Because usually we go to the no, I guess we do energies after we leave Turkish Lira. But let's do that. Let's jump over to the metals market here. There's gold. You can see it trading at 1777. Excuse me. And you can see the strength that's been in it. You see the white line here above the dotted line, the two different stochastics, the fast and the slow, competing with each other. A battle between two stochastics, the fast and the slow. And you can see here, you know, it's lifted up. We got green going on. And then you go over to Chicago Quant. And can I get it there? I think I can I? No, that's currencies, so we got to go to here. That's what it is. There we are. Go to the window again. And right there, there's the gold. And you see the gold is lifting up, and that is in the June contract. You can see it's been in daily buy. Gold has been in daily buy for a while. What is it? Right there. You can see it. We've been in a weekly sell for one week? Oh, no, we're in a weekly buy. Okay, I'm sorry. We're in a weekly buy. And we're 12 days in a daily buy, right? Remember, I don't pay attention to these things all the time in the sense of, you know, like I haven't been trading gold lately. That's the honesty of it all. I'm more in the indexes. You know, I think the indexes have more punch for their dollar. And you can see here, we've jumped into the weekly buy last week. We lifted up, and now you can see it's trying to back off in here. And let's see, closed on Friday at 1780, and we're trading about $3 down. And today's high is 1790. So we were $13 up. Now we're $3 down. Something obviously popped out. Let's take a look at that through J4X. We can do that. Let's see. Let's go to like an hourly chart. Yeah, you can see it just over the last hour and change. It rolled over. Something came out, and the Federal Reserve figured that they want to stall it out. You know, they want the competition. Normally, as middle-aged muscle said, you know, usually when the dollar goes down, gold goes up. In this case here, there's some pressure on it, and they're both falling at the moment. We'll see by the end of the day. I have my doubts that the selling will last, you know. More than likely it'll firm. Whatever happened was just to slow it down, you know, because it was showing some strength. Our economic numbers are screaming that we've got inflation coming in every bloody direction, using the profanity word. Sorry about that. I mean, it is just pouring out. The inflation is, board foot, I mean, it's up to $10 or $11 now or something like that. I mean, it's insane. You know, normally, you know, lumber goes for like, you know, $3 and $4 a board foot, or $2 a board foot, or $5 a board foot, but $6. Now we're at over 10. I mean, we see cattle, we see corn, you know, playing the fives, and we see cattle. Actually, cattle just started to. We went into a sell on that. They're selling hogs and cattle out of nowhere. Is that an anticipation of wheat, corn, and soybeans, which I think, yeah, you can see it there on the fact check spreadsheet. 5 weeks in a weekly buy in corn, one week each now in wheat and soybeans. They're starting to turn them up. It's going to get more expensive to feed those animals. And, you know, they're already at some good prices already. I mean, really good prices. We're seeing inflation everywhere. And luckily, we're capable of producing a lot of things ourselves, so we can buy a lot of this in dollars. But if we had to import it, oh, whew, it would be pouring all over us when it comes to the inflation. People would be like getting antsy. Then all of a sudden you're going to see all kinds of craziness going on with the markets. You know, you'll see some nervousness. You know, in the beginning, there was light. There was darkness, and then there was light. Let there be light. Now, in the beginning, uh, in markets, we always saw that stocks were a great inflation hedge. So because they were able to raise their prices. And then as time goes on, their earnings start to drop because they've had to raise their prices, and customers start to back away and start to budget themselves and so forth, Middle age. One sheet of plywood at Lowe's, 56. Yeah. Yeah, I got a friend that's putting a small office, a decent size office in his one of his barns and on his farm, and he's moving. He's selling his warehouse because of the real estate prices are so high up. He figures, why not? He's 70 years old. He's going to cash in on that, sell his warehouse, take the cash, park it in some better investment, and he's renting a warehouse down the road for him at penny on the dollar prices because it's a farm area, and so a lot of people don't like to have their they want to be near major highways, and he doesn't need it. He's a manufacturer, and so he's going to get like the 3 times bigger warehouse in great condition for which was a packing plant on food. Anyway, end result is that had 2 buys of lumber, 2x4s, and the first one was like $1,100. He's like, I can't believe this. And I said, yeah, I think I've talked about it in the webinar where his dad and him split trees or something back when he was like 10 years old. His dad just gave him the lumber from 40 years ago, and he put it up in one of his barns. And I said, I don't think his dad realizes what the price of that lumber that he's giving away is thousands of dollars now. And yeah, it's $56 for a piece of plywood. That's a pretty aggressive price, pretty aggressive. So yeah, inflation, we're starting to feel the inflation here a little bit, definitely. And the markets are going to start to feel it also. Somewhere along the line, we're going to start seeing that too. So that is the name of the game, traders. That is. All right, now, where did we leave off? There's that is gold. Let's look at silver. See what they did to silver. Silver did the same thing. Look at that. It's made that dip down. It got as high as over the $26 area. Let's see, right here. And maybe we'll go short term, find a short term chart, take a look at gold and silver with our mathematics. And then we can hurt our elbow patting ourselves on the back. There it is right there. Yep, same thing. You can see it's daily buy for a couple weeks. Weekly buy for a couple weeks, and has slipped in and out of daily buys twice during that time period. Matter of fact, we had a long run there for a while. It's at 6 days, and then it dropped off for a couple of days, and then jumped back into the buy again a few days back. And yeah, there's a lot of strength in there in the metals, and we're going to see what the dollar does against it. I don't know. I don't think we'll see a loss of confidence. That's part of the thing that we have been paranoid of. I keep on telling everybody, we watched this stuff in the 70s and the 80s and the 90s. We were terrified of our government, getting out of whack and just spending money like it was water. Well, we're here. We are here. We didn't want to see loss of confidence of the dollar, but more than that is we didn't want to see loss of confidence of our credit rating. That's what we were really paranoid of. The credit rating. That's what we were very nervous about always. And now the whole world is ever since 2008, pretty much, can you imagine? Lloyd's of London is out of business. No one ever expected to see that. That you could have knocked me over with a feather to believe that Lloyd's of London would be out of business. But now they're owned by the Exchequer. Merrill Lynch, out of business, owned by Bank of America. Bear Stearns, out of business. They were class acts. They invested so smart for decades and decades. And I don't know, Merrill Lynch, Finner and Smith, White Wheeled, they were around for so long with class ideas, intelligent ideas. Not only are they smart investment ideas, they were number one. They're gone now. They're owned by a bank. They're gone. It's not like they paid $175 a share for it. They paid, what, $6 a share. It was bankruptcy. They were in bankruptcy when they bought them. That's why Bank of America is only at $40 a share when J.P. Morgan is at $140 or $150 a share, and Goldman Sachs is at $200 a share. It's because, you know, J.P. Morgan Chase, they purchased Bear Stearns for nothing. I think I don't know if they paid more than $1 for it. You know, I mean, it was incredibly cheap. They were given billions in cash, to buy them. Lehman Brothers gone. You know, I mean, Bank of Scotland gone. HSBC gone. Deutsche Bank, there you go. Deutsche Bank gone. Citibank gone. They don't exist anymore. Only in name. They're owned by their central banks. That's why all you have to do is look at their stock prices. I mean, Citibank is trading at $7 a share, basically. They did a 10-for-1 stock reverse split to pretend to make it look like it's doing great. So you look at the stock, it's $74 a share, but really what it is $7.40 a share. And then you look at a J.P. Morgan, it's trading in in the 140s, or a Bank of America at least is in the $40 area. A Goldman Sachs that's in the $200 area. There's very few banks out there to begin with anymore. The rest of them are controlled by their own central banks. Deutsche Bank, what's it trading? $6 a share, $5 a share, something ridiculous. That's all it is. It's down there for pennies. No one will buy it. They try to give it away every year. They can't even sell it off to a suitor. So, there's a lot of smoke and mirrors going on in our whole financial market. That's what we're here for, Doc, every day, telling you it's here. Get used to it. And who knows what will happen when it does happen. But I can tell you this, our math will pick it up. Matter of fact, let's get a little bit crazier here today. I want to show you something that I send out some stuff that Dukascopy people and some friends from the trading floors. And when certain people pass on, I will finally probably not send it out as much, or unless someone asks for it. Let me go open up something here. I want to show you something. Doc has been following this one indicator that I developed back in the 1970s and back tested it on the Dow Jones Industrial Average all the way back to like 1920. And what it does is there it is right there. That's the March contract. That's already expired. So now let's just show you what the June contract is. This is the Dow Jones Industrial Average. Now we got what we call is a green dot new wave signal. And what it does is when it occurs, I see incredible moves. I mean big moves. The 1982 rally, the bull market explosion, where the Dow Jones Industrial Average tripled in price over a few years. Tripled in price. Can you imagine this thing tripling in price? We're trading at 33,000 right now, or 34,000. I think it's 34,000 now, right? Can you imagine it being like, 102,000? The Dow at 102,000? We had a new wave signal 6 weeks ago in the Dow Jones Transportation Index. Then we had right there. Then the week afterwards, we had one in the Dow Transportations and the NASDAQ 100. Then the week after that, we had one in the NASDAQ 100. Then we had another one in the Dow Jones Industrial Average. Then we had a holiday, and then another one last week in the NASDAQ again. Sometimes these things don't occur. There's one. Look at that. Look at the distance. The last time we saw something like this was back in November, and the stock index went from 26 to 31 in less than 2 months. All right, and then you can go and we can look at the March one right here. And you can see, you had one, that's the November one, and we had one back in August where it went from the 26,000 to the, to the 2,900 area. And then it, went sideways for a while, and then we went down. Then we had another new wave signal in the Dow. And then I don't think this chart shows it. I think I have other charts. I saved them because remember, this is past. It's gone now. And we've had 5 out of 6 weeks of these signals. I mean, it's saying that we're going to have a Hiroshima type of explosion. That's what it's saying. I seen it happen in the V bottom. Remember when I was so adamant about the V bottom in March, April of last year? We had 5 of them in 5 weeks. And then we went from, well, I don't know, 20,000 to 30. What do we? Well, we've gone to 20,000 to like 30,000. The Dow Jones went up 10,000 points off of it. 1987, I had 4 weeks of these signals, and the stock market fell from 21,100. I'm sorry, 2,100 down to like 12,000, 1,200. It was like a 50. It was the biggest drop in history. So traders, collars. All I can say is the best thing any trader can do, or investor or retiree, is put collars on to protect your assets. Put them on for 4 or 5 months, and I guarantee you, and I can say that with 100% confidence, you put collars on, and you're going to control. You will have at least 90-95% of your assets in 6 months. No collars, it could look like February, March of last year, where you lose 33, 34, 35% of your assets. Put collars on and insure. You drive a car, you put insurance on. You own a house or an apartment, you have insurance on. You have health insurance, okay, depending on the country you're in. Put insurance on your assets. Put collars on. Sell the call, buy the put, and protect your assets for the next month and a half, because something's going to happen. It's going to do one or the other. It's going to explode in one direction or the other, or it's going to do totally nothing. And the worst case scenario is you lose 3 or 4% of your assets. That's nothing compared to losing 30 or 40% of your assets. Insure it. Insure your portfolios. Insure them right now, and just sit back and feel you'll sleep well at night knowing that your assets can't go anywhere. That's what it comes down to. All right, now, where we left off, we were looking at Turkish Lira. And let's go over to the Canadian. There's the Canadian. You see, Canadian's trying to rally. Went into a weekly buy last week, and it's already falling apart. I didn't even see that. Let's remove that. Oh, no, you know what we'll do? We'll just move it over. We'll just change the color of it. Look at that. It's already trying to roll over on us. It's kind of surprising, which is a bullish sign for the energy sector. Because when Canadian goes down, usually oil goes up in value. So let's go take a look at oil. Let's see, right? Where's oil at? It's around here somewhere. Where's it at? Right there. There it is. Oil's trading at 63.42 at the highs of the day, showing that strength we talk about. Excuse me. Let me take a sip of water again. Okay. And then let's jump over to, I hear that noise there. I wonder if I can, let me do this. I keep on hearing it's static. Hold on a second. Let me see if I can fix my microphone, because I can hear the static. Can anybody else hear the static that I'm hearing? Let's see if that helps out any. It still sounds a little tinty. All right. I'll have to check it out again after the webinar. See if we can straighten that out. But it still has that tinty sound to it in the distance. That sounds a little bit better. All right, now let's look at New Zealand Canadian, the loonie trade. That's a good tool to look at for the energy sector. You can see this has been holding firm. It's in a daily buy for 3 days, going on a fourth. And you can see it's up today compared to yesterday. And we're in a weekly buy from last week. So that makes sense. We're seeing more strength in the energy sector. Who knows? We might go back up to the 64 area at this point, the way things are rolling along. Is it fine there? So it's just my speaker here. Okay. Well, what I did, Robin, is I just did the oil, not the oil, the alcohol, and I unplugged and cleaned it off and put it back on. So it sounds a little bit better here for me. All right. So the strength is starting to kick into the oil. Usually oil is like a for a growing economy. I think it's just inflation. I think they're just buying for inflationary reasons, nothing more than that. And we'll watch the dollar slowly sink if we start to see more and more of this inflation stuff. All right, now let's jump over from there. What we do normally is we look at the energy sector itself. So let's check out the energy sector. Let's do this. We have oil up on J4X. Let's put oil up on Chicago Quants charts. Right there. Yeah, look at that. Holding firm. And we're in a daily buy. And we're flirting with our weekly buy. Okay, we didn't close in a weekly buy last week. Interesting. Yeah, see that? We're 2 weeks in a weekly sell, but we've been 6 days in a daily buy. So you can't be short. It's just telling you that your long is very dangerous unless you're using binaries or options. That's the only way there. Then we'll go over to natural gas right there. You see natural gas has popped again today. Odd time of the year to see natural gas go flying up, but it's starting to do it. We're not even in May yet. Usually you start to see this stuff at, earliest is July, late July, but we're starting to see action in the, now they're starting to buy into this. And you can see we closed in a weekly buy last week after, what was it, 6, 7 weeks? 2, 4, 6, 7 weeks in a weekly sell from the 280s, 290s area. We are marching our way up, and this was really strange. Here you can see the action here where we went sideways for 3 or 4 days, and then we almost jumped into a buy, failed at it, and you can see these couple days up again, and this is going to make what's happening now is this will make right here. This has made what this has lost. See, it's almost like a mirror image. That's how our math works. And that's usually the way it rolls there. Daniel! Crazy, crazy. Welcome to inflation. I think we are seeing math and numbers coming out of Bureau of Labor Statistics and commercial, CPI, that all this stimulus is starting to act like a tax on us. That's what's happening. That's what's starting to freak everything out. You can barely hear me. How about now? Is that any better? Is that a little bit better there? How about that? But we're starting to see numbers. That's what's going to start to shake some things up. Money's going to start to take some of itself off the table. And I don't know if we're going to start to see some real damage into this market, but I know one thing. I'm getting signals that says it could be like 1982 or 1987 or 2000, a couple of the other massive explosions. I've been telling everybody, put collars on at this point. Put collars on. That's what it really comes down to. Put collars on. Everybody put collars on to have equity. Put collars on. I can't tell you how many times. A collar is where you sell the call and you buy the put. Do it out about 3 or 4 months. It's insurance. It protects your portfolio. Most you'll lose is, 3 or 4%, 2 or 3%. You might even make. It depends on how well you're good at it. And it's a definite clear warning, danger right now, and we're seeing it in the math. So traders, be careful out there. I think we're going to start pushing that idea every day, just like we talked about the V bottom back in March, April of last year. And I kept on saying, don't be short, stay away from it. V bottom. Remember that great debate by the talking heads? V bottom. Can't be a V bottom. It's impossible to be a V bottom. What did we see? We saw the Dow go from 20,000 to like 32,000 or 31,000 in a heartbeat over a few month period. So be careful, traders. Things are starting to really get crazy. Yes, it is. Let's see. Where are we at this point? We're heading towards... let's see. We're going to find... Where is that at? We are going to... let's see. Where are we at? All right. We were looking at the energy complex. Let's just take a look at the Robo Gas. I think they're still trading it on that contract. That's the May contract. It should be getting ready to expire any day now. Yeah, you can see it. It's still holding up in there in the $2.40. Is that $2.04? It's rallied from $1.43, so it's gone up about 70 cents. What's that? Like a 33% increase to power your automobiles. And we did slide into a sell for this move here, I guess, didn't we? Was that November? No. Okay, we're still in a buy. That's what it is. Oh, I see. We're still in the buy, but this contract's getting ready to go out. We need to put the. This is just delivery doing that. Let's do this. Let's change that in front of you, because let's see, April, May, June. So we want the M's now. So let's find an M. Let's see if we have it. No, we don't. So add it. RB. Look up. And let's go to the M's. There it is right there. Emski. And there it is. Let's see what the M looks like. Oop, sorry about that. RB. Rhythm and blues. Still weakness there. Trading about the same price. We'll see how that plays out, but I would assume that it'll be, doing all right there. That's the energy sector. Now let's drift over to the currencies we jump into now, unless someone wants to see something. If you want to see something, we'll just jump to it. Let's see. Daniel says Spanish index bullish, Singapore index bullish, volatility futures at bottom. They look to turn around this time. The rest of the stock indices look bearish. Let's take a look at them. Right there. So there it is right there. Yeah, you can see that the NQs are down, and it's barely holding up there, but they're in weekly buys still. So I've got a GTC out there, but not stepping up yet. You can see same thing here. There's the S&P 500. You just don't. The federal government, the Federal Reserve here in the States are going to hold these stock indices up, especially with Mrs. Yellen now as Secretary of Treasurer and Mr. Biden as President. Oh yeah, baby. They can't spend enough of everybody's money to do their thing. They're going to keep on doing it. Stereo perfect. I like that. So we can hear we can hear you from one side for 1 second. We heard you stereo very right. Now we hear you stereo perfect. Cool. Very cool. All right. So yeah, there's the S&P 500. Here is the Dow Jones Industrial Average. They're really having a hard time breaking down. The moment this thing even breathes, minus the time manifold, I'm gonna be jumping in on the short side so fast that you're gonna think I fell from 20 stories. Yeah, exactly. And same thing here. You can see here the time manifold in the weekly. Look at that thing. It is just not rolling over. That's because the government is plowing the do-re-mi into the marketplace. Same thing with the S&P. Look at the S&P. The green line is not even close. Oh, we gotta shrink this down so we can see it. Oh, I can't wait to see this. I think it's rising still. Look at that. Look how far away it is from the time manifold. I mean, they are plowing money in there like there is no tomorrow. This is the greatest. They could call this Bengali. This is Barnum and Bailey. This makes Madoff look like a chump. And what I mean by a chump, it means look like as if he didn't defraud anybody. That's how small the smoke and mirrors are from Madoff compared to the federal government at this point. Let's see what Daniel says here. Daniel says, by the way, we can hear you from... Okay, commodities, copper, bullish. Yeah, check this out. You should see the action in that today. Look at that. Zoom to the moon, Alice. It's one of the biggest spikes we've seen in a while. Let's give it a refresh. Now, we didn't close in the weekly buy last week from it, but we were in daily buys since here. Since the 408 area. No, 412, 413 area. And look at that. At least you're not short from our math. And you can see here, it's like guns blazing. Now, if you're trading options, you might have been long in here and caught some of that, or binaries. But when it comes to the naked long, you got to be careful. I don't want to see any of these get stopped out and then watch it go to the moon on you. Let's see, commodities, copper bullish, 426 to 442. Palladium topped out 28. Time to sell. Gasoline bullish. Time to sell. Let's see, gasoline bullish. Crude oil turned up. MACD may correct, but then later on it will go from 63 to 66. Yeah, I hear you. I see all that action. You're right. That's what we just said a little while ago, right before you came on with the crude, I think. Didn't we do that? Or were you on when we were talking about the crude? Yeah, it's going to probably go after these highs in here. You're right. Probably go after that stuff. And we have it on the J4X. You can see that the MACDs have turned up right there. You can see the white line is flying, just flying well beyond the dotted line. Flying. A little weakness in here from the flatness the last couple of days, but nothing major there. Oh, yeah, this is... as we used to say long time ago when we had trading floors, we used to say, get all the married men with children off the trading floor right now. It's a little too dangerous. Yeah, that's the way we used to talk about it. The good old days. Some of the crazy things we would say. No wonder Doc is so crazy on this webinar every so often. It's just it's just, it just is what it is. It really is. Doc is, I don't know. Doc is, just we're from a different era, I guess, from when the markets were free. And they are not free anymore, unfortunately. But we are very bullish on them, But, at this point in time, they are what they are, and we trade them just as best as we can. And that's the name of the game, traders, is be smart, be safe when trading. That's what it really comes down to, is you just got to be, as, just like collars. You're not taking any real risk when you put a collar on. What are you going to do? Earn a little bit less? You might earn, actually, if it's wrong, you just earn a little less. If you're right and the world goes to hell in a handbasket, you retain like 95% of your assets, if not like 97% of your assets. If you sweeten it and do a put spread, at the pay for, a call spread. If you sell a call spread to pay for the put, you actually might make money. If you put a back spread on, one time I put a back spread on for $30,000. We were hedging out a $2 billion portfolio. We weren't we weren't protecting the $2 billion portfolio. We were speculating at the same time. I've told people this in the webinar. It was for the great Jack Nash. Leon Levy, Jack Nash, Oppenheimer funds. So they said, how can we make some money if this thing really falls apart like this? So I said, look, we'll put a back spread on. That means you're selling, like, I sold something like 2,800 puts, and we bought something like 4,200 puts, and it cost us $30,000, like $31,000. So we put the spread on, and we did it in Juniper because we were betting about the tech bubble, and Juniper was trading at like $220 or $230 or $215 a share, and we sold something like the 190. What did we sell? I think we sold something like the 205 puts or the 195 puts 2,800 times, and we bought something like 4,200 of the 180 puts or 177 puts or something like that, and we were risking about $30,000. A little more than that. It made a little more than $66 million on a risk of 31,000. Yeah, $66 million because the stock fell apart with the tech bubble over the next week or so, and the back spread took in over $66 million from it because the stock fell all the way down to like 26. So, insurance traders, right now, I've been putting it out to the floor guys that Doc has seen his numbers scream, be careful. You know, and when Doc says be careful, there's a good 70% chance you better be careful. Let's see, Vix. Let's tune in, Vix, and then I'll read what you have to say about it. Oh, wait a minute. What else do you say here? Agriculture and lumber, 13 told you. Is it at 13 now? Oh, my God. Yeah, I know. We were long that run to 8 when it ran from 5 to 8. We were long it. It was crazy. When it got to 1,000, it was like, this is insane. Robin used to trade in that pit. I don't know. Let's see. What did you say? Which product was it? Oh, Vix. Let's go check out the Vix. Let's see. Where is it at? Right here again. Right where we have the... not that one. There it is. There it is right there. Now, check out the VIX. There's the VIX. And I think that's today. Yeah, that is today. And then we widen this. It's getting ready to go into a daily buy. It's still having a problem. You know, we've been short from here, from the 25s. It's tried a couple times. It couldn't get into the buy because it was a red dot that day. And the next day it spiked up and then closed lower. So it didn't trap us. We've been in a weekly sell since the 23s, 24s. So you can see here, you know, it's come. Look at the green line. Let's widen this. Notice the green line is making it through the time manifold. And over the next day or two, this thing could literally be in a weekly buy above the weekly buy number and then confirm it by the end of the week. Same thing here. You can see the daily is now threatening the zero line. Right now, plot 1 is minus 0.05. Remember, Doc's math is measuring in the tens of thousands and hundreds of thousands of a tick. That's what Doc's math does. I measure, remember, I designed this to measure atomic particles. So we can go way, way down. I just limit it out to 6. I think you can only see 6 digits. I don't allow more than 6 digits to be seen. But, you know, it'll tell us if it's a minus or not, even if it's 7 digits out, that type of thing. It's just you won't visually see them. And you see that when we do the currencies here. When looking at something here, you can see like right there, what is that? That's the NASCAD. And you can see it's a plus by 0.001210. So that's in the, what, the thousands? Or the hundredths? I guess it's the hundredths, right? And there's times where we see it, you know, making, was it in the yen? The yen can be really funny. Where's it at? We'll get one here. Somewhere along the line. Oh, there it is right there. No, that's only 21 now. I think there was at one point, it was in the 100,000s we were looking at it. Where was it? It was funny. Let's try cable. Yeah, cable's there is it's 0.00574. Somebody was in there. Maybe it was euro. It was in the 100,000s the last we looked. Yeah, there. What is that? It's in the tens of thousands at that point. That's what we're measuring. Tenths of 1,000. Tenths of 8,000. That's what we're looking at. That's what Doc's math is picking up. I think that's so far out. It blows my mind every day. All right, so VIX index up 5% today. 10-year, 30-year bonds negative today. Let's check them out. Let's see where they're at. Right there. There's the 30-year. Yeah. We're breaking into the sell side here. We've been in daily buy since back here. And it ran there. Went into the weekly buy here. This was the winner chicken dinner. And now you can see today they are starting to flirt over the last hour. Whatever drove the metals down. Oh, look at gold. Gold's dipping even more now. I wonder if I can get. Let me see if I can find that. Hold on a second. Let's see if I have it on this one. That's the stock market. I think I deleted it, didn't I? Let's see. Let's find gold on a short term just for the fun of it. This is Doc has fun. He likes fun. Okay, let's try a. Let's try this. File, copy window. File, paste window. And we're going to put gold in there. And then I'm going to bring it up on the board. You'll be able to see gold trading inside our mathematics. Let's see. There we go. Gold June. It's loading. See how many days. Oh, here you go. Okay. You'll be able to see this live like me when it fills all the way in. See, it's backing and filling now. And you can see gold's come off its bottom of 1765, maybe 66. We'll be able to see our math soon. It'll fill in. You see how many days back it's going. There we go. So you see here, went into the sell here, fell from, what is that, 1774 down to, what's that, 1771. Tried to pop up, gave us a buy there, was it? Yeah. And then it rolled right back over again. Gave you another big winner chicken dinner. All the way down to here before it was allowed to go into, there's the buy right there. Oh, you can't see this. Let's see this. Sorry about that, traders. There we go. So, went into the sell here. Caught that whole move. Gave you a little whipsaw here if you're playing with that stuff. And then it went into the sell there. And didn't go into a buy until right there. See, it's only a green dot and the histogram is plus. And you got a nice little bounce out of it. And it already threw you into a sell thing again here. And then it started to give us a bottoming in here. Put you in a buy right there. Off of that one right there. Because it was just a green, not a green and red. And green and red represented volatility coming. And then it was another winner chicken dinner. And you can see a little correction thing here. And we're in the buy now, and I guess they're going to try to drive it back up to the 77 where it closed, and whoever was out punching it out the door didn't succeed too well at it. Let's put it that way. Let's see, dollar index off 5%, 91. Next days, weeks, right? Daniel British pound up atop Norwegian kroner. Yeah, they're rocking, aren't they? Euro, Swiss franc, Mexican. Ooh, let's check out the Mexican peso. We've been following that. It's been bullish. Let's go check that out. Let's move this off the screen. Right there. Let's see, where's it at? Right there. Let's check out the peso. There is the peso. Yeah, see, it's been in a daily sell from here. And it's been in a weekly sell from here. And it's been a winner chicken dinner. What's that? 2, 4, 6, 8, 10, 12. A little warning of more volatility coming. 14, 16, 17, going on 18 days. So, love those currencies to trade. They are great. Anyway, traders, we're out of here. This is Doc from North America. Everybody be safe and smart. And what does that mean? Collars. Option collars. That's what I'm going to be pushing for a while here because it is screaming that the nutsos are going to kick out. Ta-ta for now. Happy trails to you. Doo-doo. Until we meet again. Happy trails to you. Doo-doo. To all our trading friends.